Let us start. So welcome, everybody. Thanks for joining today's conversation on investing smarter, best practices for innovating and investing in the future during a recession, or at least innovating when the specter of a recession is causing uncertainty and budget constraints. I'm joined by my friends, Sean Sheppard and Bryan Smith from global corporate venture builder U+. Who will share their perspectives and their playbook for how to innovate in a recession. I think Sean and Bryan are uniquely positioned to engage in this conversation, having launched and exited ventures, having advised many of the world's leading companies on how to cost effectively innovate, and also having sat in your seat as Bryan has leading product, brand, and corporate innovation for tire manufacturer Bridgestone. So I'm excited to see what comes out of our conversation. Very quickly, an introduction from me. I'm Stu Willson. I'm the co-founder and CEO of Radicle. We are an expert-driven research platform focused exclusively on startups, new markets, and innovation economy. We've mapped millions of startup leaders, domain experts, business model experts, technology experts, et cetera, who power a set of offerings that range from custom research, like market studies, innovation trends. We offer project-based staffing and talent sourcing, and recently launched expert calls and surveys, all in service of helping the world's leading companies and investors better understand the future and make better decisions about navigating it by sourcing insights and perspectives and opportunities directly from the entrepreneurs and startup leaders who are shaping it. If you know me, you know that I'm obsessed with figuring out how to engage this experience and this expertise, the expertise of people who are building the future to help others do so, and obsessed with helping people better understand how to innovate, which is why we are here. So I guess in terms of how we'll run this webinar, we will start with some questions that Sean and Bryan and I prepared. We'll open up the Q&A to you. If you have questions, please drop them in the chat. I'll also run a few polls. They're anonymous, so feel free to be as candid as you like, sharing how you are responding or what you're seeing from your own organization. And with that, let's begin. So Sean and Bryan, you've both taken interesting paths to your current roles. Before we get into some recommendations and best practices, can you give us a little bit of a background on yourselves and how you ended up here, but also at U+?
Sure, I can start. It's kind of a circuitous and funny route, but I've been a serial tech entrepreneur for close to 30 years with 3 exits in Silicon Valley, plus 3 venture funds. After deciding I wasn't going to raise another fund, I was helping my portfolio get traction inside of large enterprises, one of which was actually doing business with Bridgestone and Bryan's group in the emerging technology portion of Bridgestone.
Awesome.
And through the course of helping my startup, I started to build relationships with Bryan and his team, who realized that I could offer some help with commercializing some of their new internal ventures. So I started to help them and then quickly realized that there were some talent mismatch with some internal resources that were being leveraged to help build these new ventures. And I knew of U+. We officed in the same building in San Francisco. I knew they had a successful track record as a corporate venture builder and had launched over 100 successful businesses and created over $2 billion in market value doing it for large enterprises. So I proposed to Bryan and his team that we bring U+ in to actually assist in this effort. We did great work together. And through the course of that, so Bryan and I were both customers of U+ before we became partners in the business. I've been with U+ now, working with them for close to 4 years, but been the managing partner of the Americas now for 2 years because I believe that this is the right way for corporations to stay relevant and maintain a competitive advantage in the innovation economy.
Awesome. Yeah, Bryan, tell us a little about your path and some of your experiences at Bridgestone, and then we can get into an introduction to U+, and then we'll get into some conversations about what people are seeing and what you're seeing today.
Thanks, Stu. First, just really excited to be here. One thing that I like to frame out quickly is that there's not one single path in innovation. Innovation, just in and of itself, is always changing. Market conditions are always changing, and so it's an area that I'm really passionate about. So my career after business school started at Jack Daniel's on the brand management team. So think of that as really managing core innovation that relates to that brand. Launched a couple of brands when I was on that team, Winter Jack and Jack Daniel's Sinatra Select, which is a much higher end brand. Moved to Bridgestone, managed a lot of product and brand marketing initiatives and product launches, and then led innovation for Bridgestone for over 5 years, which is where Sean and I first got introduced. We worked originally on an intelligent tire monitoring tool. So essentially, Bridgestone is the largest manufacturing company in the world. They're looking to digitize a lot of their service offering and make it a lot more efficient, make it user-friendly for service providers and for customers, obviously. So worked on that, led a 15-person product team, which is where Sean and I and the U+ team focused on building a tire and vehicle management subscription business. We're also looking at, I'd say at a high level, digitizing tire and vehicle service into enhanced applications for fleets, for consumers, and building revenue streams around those experiences. So that's kind of an overview of me. Also managed large P&Ls and budgets, and helped Bridgestone invest in startups and mobility. Looking forward to digging in further. Stu, kick it to you.
Awesome. Yeah. So maybe again, before we get into kind of the meat of the webinar, I think it'd be useful for those who are less familiar with U+ to share a quick introduction to U+ and its approach to innovation, how it seeks to create value for clients, and maybe how it's different from other innovation-focused consultancies and venture studios. I don't know, Sean or Bryan, who wants to take that, but it's great to hear just a quick introduction to U+.
Sure, I can jump in. So I think I'll start from a corporate innovation perspective and describe some of the challenges. So what I experience in corporate innovation is really primarily a challenge with broadly people that have actually managed building brand new businesses. So if you look at Bridgestone, largest tire and rubber company in the world, very good at managing a scaled, complex business, where organizations like Bridgestone need to develop when they're building new innovation is building teams, governance structure, strategy to build new innovation. So that's effectively what U+ does. We're an innovation, venture building, and digital transformation company. Sean described some of what we've done over the last 14 years. We work across different industries and companies. And I think that the takeaway is there's a difference between being an industry expert, which Bridgestone and the example that I'm providing is an industry expert. At U+, we have stage relevant experts that help throughout the innovation life cycle. So if it's innovation or it's venture building or it's scaling up and building digital businesses, that's where we focus. Sean, any additional thoughts?
Yeah, no, that's really it. Just you need people who know how to go from 0 to 1. Most organizations don't have them. They don't have entrepreneurs or entrepreneurial thinkers or people that know how to embrace ambiguity and manage the new versus the now. And that's where we bridge the execution gap that exists in most of these organizations.
Awesome. Let's talk a little bit about the current environment. We may be going into recession, we may not be. Certainly, we've been talking about it for a long time. And that's led to uncertainty and budget constraints. You all serve dozens of the world's leading companies. What are you hearing from your clients? And by the way, related, I'm going to share a poll right now with the audience about what you're seeing. But yeah, I would love to hear from you too, what you're hearing from your clients about the environment and kind of what it means for their efforts.
I'll kick off. I'd say to start, Sean and I are focused in the Americas business, so North America primarily. So focus it in there. Different markets across the world are reacting a little bit differently. I think in the U.S. market specifically, there's a lot of concern about a potential recession. And I think particularly when you get to the end of a budget cycle and you're beginning a new one, there's often hesitancy to invest more in times like that where there's fear. I think if you look at some of the economic numbers that we're seeing right now, it's unclear. And maybe I would argue positive at this point in terms of how challenged the economic conditions in the US are going to be. But I'd frame it up pretty simply. The news creates a perception, which can turn into reality, even if it's not. So we're seeing some of that concern from our customers now. And what we're really here to talk about today is how to think about innovation and not think about it as a cost center, but rather a profit center, because that's what it is.
Yeah. Sean, any builds on that?
Yeah, I've been through several of these cycles in my career. And what I've seen in terms of behaviors in large organizations when you get into uncertain times like this is a sort of a return to the core of the business and a reprioritization and clarity about where the priorities lie. And we're seeing as a result more core innovation projects and adjacent stuff than disruptive things. And obviously the pandemic has accelerated digital transformation for everyone, whether they like it or not to some degree. But there's still a lot of core incremental improvements and optimizations that can be made through innovation to really improve the top and bottom line of a business and help create and maintain that competitive advantage that everyone's looking for. So I'm seeing more of a return to that. And I think that people are realizing that their customers don't like too much novelty and too much change at once. They like to see some familiarity along with market improvements that advance their lives and businesses. And which is why we advocate for what we call a fast follower strategy. You don't have to come up with something very novel and unique. You just need to meet the current expectations and needs and experiences that your customers are getting from everyone else that are tech-led. What is being adopted right now by your customers and your employees that you're not providing through your applications? Mm-hmm. It's a great place to start for quick wins to demonstrate the value of an innovation function.
Got it. We'll dig into that in a little bit. Maybe we could start kind of with a why question, which is why are corporate innovation growth budgets being cut in this environment? And I ask because, like, on the one hand, bad, right? Like, we want more budget. On the other hand, it's possible that there might be some good that comes from that, or that, perhaps like we had fewer constraints in the past and, that led to perhaps lack of discipline. Just speculating that there are a lot of different sort of reasons why the budgets might be lower today than they were a year ago. So when you talk to your clients and, based on your own experiences, having worked at Bridgestone and having, advised, many others, like, why do you think the budgets are being cut? I mean, other than that, there's a specter of recession, what else is kind of behind that?
So I would frame it in a couple of different ways. So to put it very simply, and I'm going to use some numbers here to lay this out. A lot of large organizations aren't good at innovation. So whether it's important or not, you have organizations that are looking at innovation and they're trying to look at the results and they don't see the results as positive. So some of the numbers, just to frame it a little bit in terms of organizations not being good at innovation, you have to innovate in order to survive long term. So if you look at the lifespan of an S&P 500 company in 1958 at an average lifespan of 61 years, you project that forward, and that this is from a study from McKinsey, you project that forward to 2014, where it's supposed to be 14 years. It's well under 20 now. You can see that large organizations struggle to innovate. And if you even look at 2020, 50% of the S&P 500 from 2020 to today have turned over. So they're challenged with it. I'll circle back with what Sean was describing and kind of the return to the core. I think that large organizations need to understand, and we'll talk about this, where to innovate. And a lot of it is, if you haven't built transformational businesses, you have to realize you likely don't have the resources, the skills, the governance, et cetera, to go do it. So returning to the core and understanding that core innovation is still innovation, and it's a great place to start. But again, just to put it simply, organizations start to view something that they don't think they're good at, and they say, hey, that's an area that I can cut, even though, frankly, it's really incumbent upon them to be successful for long-term survival. Sean, I'll kick it over to you for thoughts.
Yeah, everything you said, of course, but I would frame it in a manner that most organizations don't necessarily recognize the value of innovation as a function because they oftentimes don't understand it.
Mhm.
They're measured in a very different way, right? They're measured quarter to quarter. And when things go bad, everybody goes back into lizard brain and into what they know. And then they're focused on the now and not the new. So the long-term strategy stuff gets shelved because they don't have a good track record necessarily of launching new innovations that contribute to the top line, bottom line, or to that competitive advantage. And so some of that is in how the innovation teams tell their story and get support, and they can do a better job of that. And to me, it's always about, can you show the organization how you contribute to the top line, bottom line, or to that competitive advantage or any of the strategic core objectives of the business, and connect those dots very clearly. And on the other side, they have the stakeholder challenges, right? People just don't understand it. And if they don't understand it, it's a very easy thing to not pay attention to.
Yep. In terms of some of the conversations that you're having with clients today, and helping them navigate this environment, have you helped them like protect these budgets? Any sort of perspectives and recommendations from successes you've seen over the last 6 months in defending that budget against cuts? Yeah, I would love to hear some of what you've learned and what you've shared with your clients over the last 6 months.
Absolutely. So I'll start with what Sean was describing about some organizations just simply not understanding innovation. So to take a step back, what we do for our teams is we look at their objectives and we try to help them focus on what they can control, and how to generate quick wins, and then how to generate quick wins and develop a buy-in strategy with the right stakeholders to continue to turn those quick wins into much larger wins. Another key thing is arming our customer base with the understanding of the criticality of innovation. And again, just the understanding that innovation is not always a moonshot. In fact, it's normally not. Incremental change is incredibly important. So if you circle back to some of my experience, launching Winter Jack from Jack Daniels, that's innovation. They know how to do that. They know how to distribute that product. And so it's about framing the story in a way that makes sense to the internal organization, and then frankly, just focusing it in. Because again, the return to the core that Sean was describing, I would argue again, for a lot of organizations, that's the exact place to start. And you want to hone your ability to generate quick wins there and business wins, and then continue to build from there. And I think what a lot of organizations do is they try to do everything at once with too little resources, and they're not able to show success to the right stakeholders internally.
Yeah. I'd love to dig into the concept of a quick win. What are some examples, Sean or Bryan, of quick wins, like demonstrable proof that what you're doing has the potential, let's say, to create value? What are some good examples of quick wins?
Yeah, well, I'll start with just framing the concept, and then Bryan actually has some really good stories from the work we did together at Bridgestone around how he was able to show quick wins. But to me, the definition of a quick win is evidence from the market that either this is something you should pursue or it's something you shouldn't pursue. And where do you get that evidence, and how quickly can you collect it, and how quickly can you turn that into actionable insights and say, there's either a there, or there is not. And our form of doing that is market validation and testing, which is you create a concept, you actually go outside the building, you talk to real humans with a structured customer interview framework and some asset that shows the concepts that you have a focused discussion to learn. Is there a business model here? Is there a value proposition? Is it scalable? What would they actually use to de-risk ideas quickly, to save the company money on things that they shouldn't be pursuing, and invest in quickly and cheaply in areas where they should, based on that feedback from the market. Bryan?
Yeah, I think great overview, Sean. So here's what I'd say, and I'll draw on my specific background. So if you look at whiskey and you look at tires, how does innovation in those industries work in their core innovation? They do research over the course of, could be a couple of years. They define new features to build into their products, and then they launch into mature scaled channels, and they generate business. So let's look at a cycle on that, and it depends on R&D, right? Creating whiskey versus creating tires is very different. But let's just call that 1.5 to 2 years. So a specific example to kind of frame up what Sean was discussing is Bridgestone was looking to launch a tire and vehicle subscription business. We worked with U+ to build a website, create subscription packages, launch those packages in 5 markets, and push consumers to look at the websites, understand what they were interested in terms of how we were tracking the digital experience. And in a matter of roughly 6 weeks, when you go from, Bridgestone has an idea, we've put it into market, you've quickly generated a ton of information about the type of customer that's interested, where they are demographically, or is it more of an urban market, or is it a rural market that's interested in it? You know, what are some of the differences in gender and age, as an example? And so that approach was something that Bridgestone had never done. So frame that quick win. We took an idea, we put it in market. You couldn't actually sell it yet. And at the end of that, let's call it the conversion funnel or the sales funnel, you say, hey, thank you for being interested in the subscription package. We're going to come to your market soon. Please leave us your email. So you're even filling the pipeline. So in a matter of 6 weeks, you're generating a ton of clarity on, does the customer want it? What do they want in the packages? And you know, again, if you circle back to kind of a 2-year cycle of launching a new product out into market, it's completely different. And it's a good example of, hey, look at what we did efficiently in the matter of weeks rather than in a matter of months or years.
Got it. The concept of quick win makes a lot of sense. And I think I would assume that most of us are familiar with like lean startup methodology and best practices. What prevents people from seeking quick wins? Is it unfamiliarity with how to stand up a landing page? And obviously that's not always going to be the way to validate a concept. It depends on concept. Is it unfamiliarity with the kind of the practice of getting to market quickly? Is it like discomfort with it because they don't feel ready? Are there other reasons that people aren't seeking quick wins? Like even like, a year ago, 2 years ago, 2 days ago?
I think mostly it's people don't know what they don't know.
Yeah.
If they haven't done this before and they haven't seen it work, so they, number one, don't know what they don't know, and number two, if they do understand the concept or it's been introduced to them, they don't know what to do next, and they don't know the order of operation and what you're actually the purpose of that operation. And the purpose of it, in my view, as somebody who's done this not just for my own successful startups, but for hundreds of others in my portfolio, is your job should be to find the truth as quickly as possible about where a product or a service or an idea fits with a user in a market and what to do about it. You should accelerate learning so you can do it fast and cheap. And then you should do it always with an eye on whether or not, where does the profitability or the impact lie in the future? And then how does that contribute back to the things I talked about before, to the bottom line, the top line, competitive advantage, or the strategic objectives of the business? And then be able to tell that story in that way. I think innovation teams need to view themselves as entrepreneurs, and I think they need to view their stakeholders as their investors. And I think they need to treat them as such, which means they have to be able to tell a compelling story to get investment and the resources and runway that they need. And they need to continue to tell that story to elicit the support and educate them on, this is how this works. My job is to get to the truth. Whether we like that truth or not is another matter unto itself. And I get to that truth through learning, right? So a test and learn approach, you construct a hypothesis, you test it, you take that feedback, you iterate on it based on what you learn, you reserve the right to be smarter tomorrow than you were today. And you need then to show a demonstrable quick win. And a learning is a win, right? I've learned something that's going to keep us from over-investing in this area, or I've learned that there's an opportunity here, or I've learned that this is worth pursuing because there's a business model behind it. And here's how it contributes to the business at large.
Yep.
And most organizations, as Bryan always likes to say from his experiences, they think about everything at scale. They assume that if we launch something, it's got to get to $100 million overnight, otherwise it's not worth it. Well, I'm here to tell you that only 3% of new ventures that come out of large organizations ever get to 50 million in annual revenue.
Yeah.
And these are the reasons. These are some of the reasons why.
Yeah. Can we talk about the order of operations? And I know it's going to vary depending on the concept and the market. Some concepts are less easy to test and some are easier. But what are the sort of order of operations to quickly validate a hypothesis and get that signal that you can share with the organization? And are there like new tools that we can use in 2023 that didn't exist like a year or two ago that would enable us to do this more quickly than we would otherwise?
Well, I think, again, not to blow smoke on you, but Radicle is a fantastic tool to explore a problem space and identify where the trends are going and what users are adopting and how entrepreneurs and investors are reacting and responding to that. It's the old follow the money concept. Where's the money going? And this is a classic example of innovator's dilemma where you can't move fast enough. So entrepreneurs are going to fill that void. And this is how you can fast follow and actually compete and beat those startups, because you do have the ecosystem, you have the resources, you have the brand, you have the reach, you have the expertise, you have all of those things. So the very first step is what we call simply a resource review. Who's on the team and what are their roles and responsibilities, and can they be dedicated to this activity? And then once you understand that and you fill in the gaps, whether it's with a partner or inside the organization, that's the first thing to understand. The second thing is to explore a problem space or an opportunity, whether that comes from a stakeholder or boss who says, hey, I've heard this from customers, I think this is something we should pursue. Let's assume that's the case. Fantastic. What's the problem they're solving and for whom? What's the value hypothesis that we can construct around that? How do we measure that value? And who are the early customers we can go talk to tomorrow to validate this hypothesis, or at least learn if there is a there there? That's the first step. And we use a very simple template for this to construct the customer value hypothesis, the early customer profile, the questions and interview frameworks to ask, and then tie that back to what's the total available market and all of those things so that you can determine whether or not it's large enough to pursue. Because at the end of the day, the only thing that matters is, can you get to a cohort of early customers that will tell the world they're better off with you than without you, and why, with around a specific use case in a very scalable customer segment. And if you can do that, then you've de-risked the idea to the point where it's worth investing in scaling it. But most people don't even know that that's the metric that matters. So they don't know how to reverse engineer their way to that place. Yeah. So they do a lot of bouncing around, and there's no real focus on one idea at a time.
Yeah, and if I could jump off on that a little bit, I think what we've seen is that there's three core areas where companies fail in innovation. It's the innovation strategy. It's within, and we've talked about this. Sean was talking about this in terms of the mindsets and skills on the team. It's how you're executing, and I just put just a really simple frame of reference here. Do you have people that have built new businesses before, that are working on building new businesses? I know it sounds simple, but it's a mistake that happens all the time. There is a very big difference between managing a scaled business and how you think about risk and how you think about reach versus building something from 0 to 1. Because I'll use in my own experience. So, I've created advertising, right? You get TV ads that, are broadcast throughout the country. The risk associated with having an advertisement out there that hits millions of people on a single ad placement is very different than what I was describing, where you have a microsite that's in Atlanta testing a new tire and vehicle subscription business, where you can manage the number of people that have eyeballs on that website, right? And a scaled business often doesn't understand that, right? So innovation strategy, a mismatch in terms of the skills on the team. And then the third piece, and all these things are interrelated, the governance and the operating model that your organization currently has, right? If you have a product team that can go from 0 to 1 and they have the skills to do it, are they being enabled by governance that understands what they need to be focused on now? Or, and I think that this will sound familiar to a lot of the people on the call, is the governance, is the executive leadership expecting that a new innovation is both going to generate a ton of revenue and profitability within, let's say, a year or 2 years, right? Because if your leaders are asking those questions, they likely haven't experienced going from 0 to 1 and thinking about it. It's more about validating the future and revenue acceleration and customer acceptance. It's not about generating profitability in the first 2 years. And then to circle on the innovation strategy, sort of back to the core, what is your organization asking the teams to do? And do you have, to Sean's point on resource review, do you have the resources to execute it? Are they asking you to, and I like to call this person Innovation Rambo, one person in the organization to manage core, adjacent, and transformational? A lot of it is just the strategy. It's not possible. And there's misalignment within the organization on what is, again, because your product teams haven't done it before. And your leaders that are governing a lot of the process and the mindsets associated with it also are challenged. So anyway, that's how I would frame it in my experience.
Yeah. And I guess to follow up on that, we're working in service of increasing the odds of success with new constraints. Where should people on the call and people who will listen to this later on social or wherever, where should they be focused kind of firstly? I mean, it may depend on their own situation, but they're facing a, I don't know, 25% budget cut. The organization is saying like, hey, like, some of these adjacent opportunities like sounded cool, but like we really, want you to focus more on something that's closer to the core. Where amongst like kind of 1, 2, and 3 in these kind of failure points should someone focus, to, I guess, gain traction within the organization, in the short term?
Here's what I would say is that really you need to have a handle on all 3 of these things. And there's one really key word. It's focus. You have to start with a focused area where you're going to generate quick wins. My favorite Silicon Valley quote is, startups don't die of starvation, they die of indigestion. Within the organizations that I've been, my bosses would often come to myself and my teams with new ideas. I'd say, you're giving me indigestion. Mm-hmm. And it happens all the time, right? So just let's start from a strategy perspective. The first thing that your team needs to do is take a look at yourself in your organizational mirror and ask yourself, where have we been successful in innovation? Where do we think we're mature? Now let's pick an area to focus on, and let's get alignment with the right stakeholders to drive it, right? And then you're executing. You're focused on generating the quick wins and showing that, hey guys, instead of back to this idea of an innovation pipeline, instead of 2 years, look at what we did in 3 months. Look at the feedback that we're getting from the customer. And then kind of in organizational governance, you have to figure out how to develop an internal strategy for buy-in that allows your team to be successful and even generate the quick win. So it's a little bit of all of those things. But again, it's back to focus on where you think you can win today. Don't try to go for the moonshot that's way out in the distance, right? So the old Jeff Bezos quote around, I'm forgetting the exact quote, but it's essentially, you've got a bold vision, but you're executing with focus today because you don't know how exactly you're going to get to that bold vision in the future. And that's through experimentation, and that's through the mindsets and the skills that we're talking about today.
Cool. My good friend Sherry has a question about whether this is a big question. Can big companies really learn and adopt new mindsets rather, that she's seen many cycles of corporations disregarding innovation or moving away from it. What are your perspectives on the ability of a corporation to learn and adopt a new mindset? I know this is actually a question that we're going to talk about as well. So yeah, curious for your thoughts there.
Well, I would say a couple of things. I mean, the fish always rots from the head, right? So it has to do with leadership at the top. And there's actual real data out there that shows that there's a direct correlation between the market cap of a company that's led by someone who's perceived by the market as an innovator versus one that is not. In fact, I think the market caps are significantly higher in companies that are led by quote unquote innovators. We take more of a pragmatic approach to the idea of creating an innovation culture or cultural transformation. We like to think of, and where we've seen it be successful, is at the team level. And if you can, at the team level, execute well and show wins, it's pretty amazing how quickly others will jump on board because they're seeing it winning. But like any pioneer, you're going to get the arrows along the way. So if you can show that this new way of working and thinking is creating success, then you can change mindsets. And I think Bridgestone's a really good example. When we first started working together 7 or 8 years ago, they had never launched a successful digital product. Today, they are now mandating that by the year 2030, 40% of their revenue is going to come from services and solutions and not tire and rubber. So they're bought in. Now, does it mean everybody inside the organization is bought in? No, of course not. But at the top, they are bought in, which means that they are getting the support that they need to get to that place.
Yeah. When we talk about the top, who are we talking about? And who should we be talking about? And this speaks, I think, to where innovation sits within an organization, you know, having.
We should be talking about the CEO, Stuart, and where we see the most successful shared innovation, shared service organizations sit is in the office of the CEO.
Yeah.
Because that tells the whole organization that this is real and that they need to take it seriously. It doesn't mean everybody's going to adopt it or leverage it or support it, but it's better than it being, somewhere else in our experience.
Yeah. I would imagine that many of the people on this call, if they sit on an innovation team, and I know many of them do, and also the people who listen to this later, their innovation organizations sit under a strategy or like corporate development or the CFO, which is similar. How do you move that? Is it even possible, you know, or is it once it's kind of set up under the chief strategy officer, it's there until you leave or they leave?
Well, first of all, you have to have the courage to want to move it.
Yeah.
And if you do have that courage, then you need to show examples of where this has been successful in other organizations, especially potentially in your own industry. Fear is an amazing motivator.
Yeah.
But there are stories out there of how this works well. And those stories need to be shared, because you're talking to a brick wall if it's coming from you. It shouldn't come from you. It should come from the market. It should come from the competitors. It should come from your customers, right? Innovation should be customer led. Let the customers tell you what you should be innovating on, because they're the ones that are going to pay you. And let the evidence come from outside. And all you become is the messenger of that. And that creates more credibility than just saying, trust me, this is what I think we should be doing.
Yeah.
Yeah. And I would just jump in and say, as an innovation leader within an organization, you need to be able to come to an aligned agreement on the maturity of your organization and the type of innovation that you're going to go after, right? And when I say alignment, I mean with executive leadership. That's why it's useful to have the function sit in the office of the CEO, because you have top-down buy-in to push this, right? So one of the things that's very different in a more innovation, outside a large organization versus a corporation, entrepreneurial environment versus a corporation, is not being willing to be as transparent as you need to be. In innovation, you have to be transparent. You have to be able to tell the truth. And if you can't look at your organization, be honest with yourself, it's very hard to build from there. So it's about getting that alignment and strategy, and then driving the appropriate governance within your organization and the product team to go get those wins.
Yeah.
So leading change is just an enormous part of driving successful innovation in organizations that haven't done a lot of it.
Yeah. What are some, without getting into like the specifics of any of these stories, what are some stories of innovation programs that have worked well, that have created value, and where they have sort of sat within the broader organization? And I realize that Amazon or, Google, Microsoft, sure, like a lot of the big tech companies have had examples of launching new products and services that have created significant value. But outside of like those three, any kind of stories that the people on the webinar would get value from hearing and maybe can use as examples within their own organizations to fight for more budget or to fight for this to sit in a different place?
Bryan?
Yeah, so here's where I would start is I would start with, and I'll use Bridgestone as the example here, but I'll expand a bit. So, Bridgestone, again, large tire manufacturing company. I think the area where Bridgestone is driving a tremendous amount of success is developing core innovation and digitizing a lot of what they do as a manufacturing company. So what are the internal tools for manufacturing? How do we make them more efficient? How interconnected are those tools? And then you get into the service network, right? So a company like that is going to have a service network with a lot of manual processes. How do you digitize those processes, make them more efficient? Bridgestone also produces retreads. So having a software where the manufacturers that produce the retreads for large trucking companies that digitizes the experience of creating a retread, just an enormous success there. So I'd say if your company broadly is one that hasn't, and you mentioned some of the bigger companies that have produced completely transformational new businesses that are out of their core, if your company hasn't produced a lot of innovation that's like that, start with the core and start with how do you make that more efficient? How do you turn things that are manual more into products? And then how can you build from those wins and continue to diversify what it is that your company does?
Mm-hmm. And then I would add service as an innovation in and of itself is a place where you can get a lot of quick wins. What can I do to better serve current customers? How can I create subscription models around that? Leveraging digital. It's now become very commonplace for the consumer experience to be monetized in that fashion. We should be doing it as enterprises.
Yep. One of the things that we've been talking about and I've been thinking about is clearly this budget uncertainty and economic uncertainty is creating constraints, and constraints have impacts. They can be positive and they can be negative. One of the impacts is that we will have likely to kill things. And maybe these are things that we should have killed earlier, but now we are forced to because that budget is gone. How should we approach philosophically killing things? These are ideas, obviously. And two, how do we kill things without it being an indictment of ourselves and our program?
Well, you have to start with the expectation that killing things is a good thing, right? You don't want to spend to put good money after bad in any way, right? So you have to create a framework that says that there's going to be a decision point where we're either going to kill this thing, we're going to keep it, or we're going to pivot. And failure, it only happens when you don't learn.
Yeah.
And you should be okay with failing fast and failing forward and leveraging those learnings to determine where you should be focusing your time. Look, in any startup or corporate venture building situation, one of the primary reasons things fail is they spend their limited time, money, and resources in the wrong areas, and they run out of those resources before they can actually find their truth. So if you adopt that philosophy that my job is to find the truth as quickly as possible about where something fits, if it does at all, and what to do about it, then you can kill things quickly. And the idea is to be able to kill them before you overinvest in them. And so you've got to have a framework that shows when and how that happens and why that's important, and get people to buy into that. And then demonstrate that killing things is good. We just saved ourselves a lot of time, money, and resources.
Yeah, and just real quickly, if your organization views killing things as an indictment, that's the red flag right there. You need to kill things, because what will happen if it is the indictment? People will start managing their careers and everything is good news. So what happens? We call them product zombies on the U+ team. They just will continue until somebody with more sense says, hey, this isn't working and what's actually here. And just real simple framing that we haven't talked about a lot is our methodology, and entrepreneurial methodology, is to put the customer at the center and validate with them as cheaply as possible before building. Lots of organizations have an idea. They assume it's perfect. If we build it, they will come, and they start building it. When the reality is you should be doing just the opposite. Focused on interviews with the customers that you're looking to understand if your value proposition will hold water, and continue those iterations until you've gotten yourself to a higher percentage of belief in the product before you start building. So really critical, and it's what drives efficiency and innovation when you operate that way, rather than assuming your idea is good and starting to build it.
Yeah. I just published the results of the most recent poll here, and I'm sure you'll be excited to see this. One of the impacts of less budget is less use of external resources. Why, without this being a sales pitch on E+, why should organizations lean in to using external resources in this environment rather than lean away?
Well, there's no fixed costs, right? So you can surge up and down on a demand basis, on a project by project or activity by activity basis, and you can also learn for a lot less when you actually look at the total cost of operating. So that to me is the reason why you partner outside. That plus you have people who are experts in this stuff and can do it faster and cheaper than you can do it yourselves.
Right. So it's it variable versus fixed costs.
Mm-hmm.
Yeah.
Leveraging expertise that you may not have internally.
And real quick, Stu, I mean, I'd say, look, it's harder to hire people when budgets are tight, right? And so using vendors to validate with you that are not on your books for a longer period of time is exactly the fixed cost idea. And then the other thing, and it's back to organizational maturity and readiness to produce innovation. Do you believe that you have those people, or do you need support? And my belief is that there's a lot of need to educate large organizations in order to be more successful in innovation.
Got it. Last question, because we're coming up on the top of the hour. What is one thing you think the people on the call and the people listening, people within large organizations should take away about innovation within a recession? And I guess what's related, what's one thing they should do tomorrow? What's like one thing they should do tomorrow, to gain momentum with their innovation efforts while dealing with like all the uncertainty around us?
I would say, once again, where can I find a quick win tomorrow? If I stripped everything else away, simplify, focus on something that gives you the fastest path to winning with the least amount of time, money, and resources associated with it.
What's the fastest quick win you've seen?
Just an incremental innovation on top of something that already exists, right?
Yeah.
Like a digital twin, where someone else is already doing it for their customer base, and you can do it for yours with a quick copy.
Yeah. How quickly have you seen that?
A matter of months.
Months, yeah.
If allowed to do it correctly. And I mean 3 to 4 months from idea to traction.
Here's one other thing I would add to what can you do tomorrow. What is your elevator pitch for why innovation is important in your organization? And then where do you want to focus and believe that you will have success? We often find innovation teams are just drowning in too many ideas, and they're confused about where success is. So if your team's confused about where to find success, it's challenging to find it.
Yep. Awesome. Well, I really appreciate both of you participating in this conversation. I hope the audience got value from it. We will share, if you're interested in learning more about what Sean and Bryan do at E+, more about them in a follow-up email. We will share this recording and a summary of key points. And if you have any interest in any of this stuff, please reach out to me. I'm Stu at radicaleinsights.com. Sean and Bryan, where can people find you? Not that it's hard to find people these days, but
yeah, of course, they can connect with us on LinkedIn. I'm Sean, SEAN, at at u.plus, which is the letter u.plus. Bryan is Smith at u.plus. So feel free to reach out if we can do anything to help you.
Cool. Awesome. All right. Thank you all. Thank you all for attending. I hope you have a great day and a great weekend. And yeah, I'll see y'all soon.
Thank you, everyone. Thank you, Stu.
Yeah. Bye-bye.
Thanks, everyone. Thanks, Stu.